Before I start this video, I put this strategy in my Discord server. We live trade in there every single day. Click the link in my bio. It's going to be free to join. And watch the video. Hey guys, in this video, I'm going to show you guys how to identify fair value gaps and how to utilize them on day-to-day trading, basically. How to take entries off of them and how to overall just avoid getting faked out because there's a lot of confusion. So basically, first, I'm going to show you guys what a fair value gap looks like, how to identify one, and then I'm going to show you guys examples on the chart. So we're going to pretend that these are green candles and we're on a uptrend here. Bear with me. So in this example, we have 3 quote-unquote green candles, and these 3 green candles actually have wicks. So these candles, they have wicks. Just gonna draw those in real quick. So it takes 3 candles to create the gap. You're gonna have the first candle, the before candle, and then you're gonna have the middle candle, which is the gap, and then you're gonna have the after candle, the closing candle. So we're going to use the tip of the wick of the first candle to create the bottom of our gap, and we're going to use the tip of the wick after candle to create the top of our box of our gap. This right here is going to be an example of a fair value gap. I'm going to change the color of the gap here to blue so it's not confusing. There you go, and I'm going to mark that in as my fair value gap. So pretty simple. You have 3 candles that make the gap. You have the before candle, the first one, the middle candle, the gap, and then you have the after candle, which is the closing one. So using these wicks right here, we create the fair value gap. And then how we utilize this is we wait for a retest of a candle into the gap to catch an entry for long. So in this example, well, in this demo, this is something that ideally would happen. We would end up retesting the fair value gap, and then we would take a long position off the retest with a stop loss wherever you want to set it subjectively. And there you go. That's what a fair value gap typically looks like. So looking at our chart here, I can instantly already see a couple of fair value gaps on here, but there's one particularly that sticks out to me. This gap right here that we created off the first 10 minutes, right over here, you can see we have a nice green candle, a bullish candle, sorry, not green. The first candle, the gap, and then the closing candle. So we have 1, 2, 3 candles. After we created our fair value gap here, you want to wait for a retest into our gap, and as you guys can see, 10 minutes later we actually retested the gap, catch an entry off of it, go long, and this is what it would typically look like right here. Now there is going to be instances where you have a fair value gap with another fair value gap right above it, with another gap above it, so it's just stacking and stacking. That's typically what you want to avoid. You don't want to take any trades off of that. And I'm going to show you an example of that and why it's not something you want to bother with. So what I mean by that is right here, we have a huge push to the upside here. Looking at the 5-minute, obviously this does not look appealing to take trades off of. It's not to say fair value gaps don't get respected. It's kind of more confusing on which gap is going to get respected. So when you have huge candles like this right here, you're going to create quite a few gaps. So the first one is going to be actually right here. You don't have exactly a perfect wick at the top there, but this is going to be one gap, and then you're going to have another one, smaller one forming right here. And I mean, looking at how small this is just not a feasible fair value gap. This is not one you'd want to even bother taking a trade off of, because it's too small to even get respected. Now another example would be right here. We have another fair value gap form, very small wick, and this never gets respected. This never gets retested. And then we have another one right here that somewhat does get respected. Right here, we do dip back into it on the third candle right here. But it's just fair value gap stacking after fair value gap, and it's just super confusing on which one you want to utilize. When you kind of stop having a crazy uptrend and you start consolidating a bit more, that's when you want to start looking at fair value gaps. Another great example of what to avoid right here, we have another gap after gap. It's very unclear which one is going to get retested and respected. We actually do have an example of an inverse fair value gap that does get respected pretty well here. So looking at the inverse side, short side, we have a nice gap created by our short candles, and it gets respected because you don't have, like 3-4 other gaps that form right above it. So that's going to be the lesson on fair value gaps. These are really easy to identify. The only hard part is filtering out which gaps you want to take trades off of, but I hope that kind of makes it a bit more clear for you guys. Use these set of rules and the gaps will be pretty easy. If you guys want to trade with me, I live trade every single day. I post all my trades on the Discord server. We have a great community of 11,000 members. Click the link in my bio. It's going to be free to join for the next couple of days, and I'll see you guys there.